Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's June 3rd. I had to think about it a minute. I missed a day yesterday. It feels like Tuesday, but it was really Wednesday for me, or actually Wednesday for y'all, but Tuesday for me because I missed yesterday. But my surgery went well. I'm feeling good, no pain or anything. Yesterday, I felt like I had somebody threw sand in my eye for most of the day, and I was still pretty much blind in that eye most of yesterday. Uh, they said it's going to take a few days for my vision to really clear up. I still have blurred vision in that eye, so it's still a little difficult for me to see. Plus, I can't. Plus, now even wearing a contact doesn't help it because my prescription is basically changed in that eye now. So I'm going to be down. I may not trade at all this week. We'll see what it looks like tomorrow. I can see the chart pretty good, and I can tell that once my eye's still actually a little dilated. They said it may take 2 or 3 days for the dilation to completely clear up, and I think that is part of what's still causing it to be a little fuzzy. But they said it takes a few days for your vision to start clearing. So, but so far all signs are great. So I appreciate all the notes and the well wishes and so forth and the prayers and all that. So much appreciated. But I'm doing well. I think it's going to be a success. I think I'm going to get back to being really close to having perfect vision in that eye again. That's the hope anyway, and it's certainly looking that way as of now. So I'm keeping my fingers crossed. But I probably won't trade. I may trade tomorrow. It just depends. But the way it's looking, I'll probably just wait till Monday to trade and just trying to take it easy. I get tired pretty quickly looking at the screen here. Um, it tends to give me a little bit of a headache when I look too long, so I'm having to take a lot of breaks. And I did have to go back to the doctor today, so I was out for a couple hours right after lunch, going back for a follow up, and they gave me the thumbs up, said everything looks good so far. So now it's just a matter of letting my eye heal up and seeing how well my vision, how close whether they got the prescription right or not on the new lens they inserted into my eye. So anyway, thanks again for all the notes and the prayers and well wishes. And let's talk about the chart here and kind of move it along pretty quickly. There's not a lot of solid trades today. There's a lot of green ones in here. This is a steady uptrend all day long. And I mean, believe it or not, we're above 3,100 already. This is the craziest market ever. Um, you never argue with this market because as bad as it's been and it's still climbing straight up, what do you say? This market always comes back. Every time we have a big sell-off, it's just a buying opportunity. And this last time I thought for once, this is probably not a good, this is going to be a sell-off that we're going to get another leg down. And what do you know? It was just another buying opportunity. So eventually one day it probably won't be a buying opportunity. But so far for the last 10 or 12 years, every time you get a big sell-off, it's just a buying opportunity. So buy, buy, buy. That's the only thing I know to tell you because you're not going to beat this market down very long. And I mean, it's just amazing that we're back. It's amazing when we hit 3,000, much less 3,100, and we went through 3,100 quickly. We went from 3,000 3,100 in a few days. So anyway, I'm not going to beat around the bush. Let's talk about the trades. This is what you call a spiking channel. Prices spiked up and went into this two-tiered channel. And you got a break here, move to a new high, and then it's sold off. The brown channel in here, the brown means absolutely nothing. All I did was just to keep it from getting too busy up here, I changed the colors a little bit just so you can see it. There's a shorter term blue channel working up, but there's also the flatter brown channel, and that's just the new channel on the move to a new high before prices started selling off. Somebody sent me theirs and they started it down here and drew it up, and it did tend to fit, but you weren't reaching the highs. I believe this is correct. And really, you need these shorter term micro trends and ranges in here to really trade this properly. So, but the real key is don't try selling a trend like this until you at least come off the highs. And even then, just like right here, we didn't get back down to the trend line. The market was too strong, and we kind of creeped up that upper side back and forth across that midline until we finally came back down. We actually went up and touched again at the highs, and then we came back down to the lows, got a break, and headed all the way back up again. And so everything kind of played out. But draw these short-term trend channels and just be careful going short. You'll see there's maybe 1 or 2 shorts in here the whole day. And people will send me their chart and why did this fail? And they're shorting this thing. And if you short an uptrend, and if you're not a very good chart reader, you're going to fail. Your trade's probably going to fail. So you're just wasting your time asking why it failed. If you counter trend traded and lost, it's because you were counter trend trading most likely. So just don't do it. Just wait till prices come back. You got to be patient, and that's what I see more than anything. People are just chasing trades on every turn and every new swing high or low. They're trying to find an entry, and it doesn't work like that. You got to find these key entry points, which the only one on the big picture is right here. The midline maybe, but when you're playing both sides of it like that, you probably can't even play that or the EMA. What you have to do is go in and find the shorter term ones and then play those. But notice you don't get many off this key entry point. The only time it comes back to it really during regular trading is here. So the only way to find any trades were to find these short-term key entry points and trade off of those. But you got to know how to do that, and you got to be patient and find them. So that's the key to this. Be patient, find your key entry points, including your micro ones, and wait on prices to play out. And don't just jump every time you see, just because you got a little trend line working here and you get a break, you don't go short. You got to get a setup. So don't, especially the one that really gets me is I get trade after trade of people thinking they saw a failed second entry and they took it and it failed. And remember this, the whole idea behind a failed second entry is it's a trap that fools people. And you guys are just trapping yourselves. You're fooling yourselves. Forget about, if you're not a skilled chart reader, don't think about traps. That's the reason I don't go deep into failed second entries in the manual, because all it does is confuse people and leads you down a losing. You think you know how to read them and you don't, and you're just getting yourself trapped. So if you're not a skilled chart reader that's probably already profitable, don't mess with failures yet. I'm going to show them to you so you can learn to spot them, but don't try trading them. I mean, if you're sim trading and you're progressing and it's time for you to trade them, by all means try to trade them. But if you're out there trading live, which a lot of you are, when you shouldn't be trading live to begin with, definitely don't be trying to trade traps, because you always end up getting trapped yourself. You're outsmarting yourself basically. And I've told 5 or 6 people today that same thing. Don't outsmart yourself, because you think you're seeing a trap and all you're doing is trapping yourself on the other side. These people that you're trading against are skilled. They know what they're doing, and you don't. So don't pretend like you know what you're doing and try to get too fancy, because stick to the easy, simple stuff that's easy to see. There's the with trend second entries that give you a great signal bar. That's your best shot. That's your best option. If you just do that right, you'll have you can be a little bit early, and you can sometimes be a little bit wrong and still have a winning trade. But when you don't even get the basics right of entering in the right direction, you're going to be in trouble. So anyway, up to 9 minutes and we're not even on the first trade. So let's move along here. Early on, there's a little bit of an uptrend here, you can see, but we're still going sideways. So it's mostly sideways here. But there is a trend. You can see that it looks like a spike in channel, and you can see this EMA pointing up. But notice how prices are back and forth. So you could still trade this both ways. But 7 o'clock comes right as we're peaking up here and pulling back. And we just had these lows tested a few times down here, and then we pushed through the EMA and pulled back. And notice you got a new low right there. Technically that's not a new low, but it's a double bottom, so you pretty much you count that as 0. That's a double bottom there. If you draw your line across there, you can see that that's Well, maybe I can get my line right. You can see that that's pretty much a double bottom. And we try to go lower once, and we push. Look how we push straight through the EMA. Not much resistance there at all. Pull back and test it from the other side, and we also confirm that trend line. There's your. You start here off your first couple of swings. You could almost argue you tested it right here, but you definitely get a third shot right here, and so it's confirmed. You get a bullish bar. If it breaks higher, just go long with it, and that's what happens right there. And you get a runner right here too. You may not have ridden this out, but if you did, you could have gotten a nice runner out of this. Then we just start going sideways. There's no entry here because you got to go. Look how there's no entry into the resistance. There's no good setup here. You're just going perfectly sideways. Don't enter in that, because what happens is it breaks out and comes back, or it breaks down here and fails and goes up. But it breaks out, comes back, and it bounces right off the trend line. This one is close. I wanted to make this one green because it should have broken above that first bar, but it came back and tested again. But you can see most of the stem down here, and these are both closing bullish, and it is right there at the midline. But you should have had this channel for sure by now. And there is room to get out. So this one's, I marked it blue, but it's real close to being a green. But this is a good trade. Notice it finds a little resistance there, but it does push on up. And then you start going sideways again. But notice there's a new high. You pull back, there's a first entry, and you pull back, and there is a second entry long right there. You get a nice bullish bar, but more than that, notice you tested this side. You came back and tested this side of the midline once. And then you get two more tests of it. So it's a double test. It's a double test of the EMA. It's a double test of this support. It's an uptrend. It's the first break of that trend line. You got plenty of room to the highs, and you just do have enough room to get out here. I think there's 4 or 5 ticks in there. So you could almost argue for this one to be blue, but it's so close to these highs that it's concerning, because notice how it touched it and pulled back. It still goes forward, but it could have come back and stopped you out and then gone forward. So this one's real close to being blue, but I marked it green. And we run up and we turn down right off the upper side to the tick. But there's no real short setup up here. If we'd have went higher again and turned down, you might have even considered that entry right there, but there's a little bit of congestion. Of course, there's no small bar with a small body or no body, so you might have taken that trade. But I'm hesitant to mark any kind of counter trend trade because we got too many people that already counter trend trade too much, and they're just constantly losing and they can't figure out why. So I'm hesitant to mark it. But if it would have broke higher first and then turned down, there's still plenty of room back to test this and the EMA. And we just came off the high, so the expectations were actually going down to here. It doesn't end up happening. The market picks up steam here. That's a good example of when you don't get down here, that's showing a lot of momentum to the upside, and it just keeps working higher. So you might go short right there, but it's real risky. And notice we're working down. You get a close outside. It tries to make a new low, and I had somebody go short right here. It actually breaks. I think it breaks higher and then turns down and engulfs here, or it could have broke lower and then went. Actually, I think it broke lower and then went up and then came back down. I'm not sure, but I know I had one trader. There's no long here at all, period, because your expectation is you're coming down here, so you might go short, but you don't go short away from the EMA like that right into a double bottom. That's basically a double bottom. So there's no short or long there. Wait for a better setup. That's just not a very good setup. So anyway, then it breaks lower here and turns and goes back higher, and now you got a failed second entry short. So I like going long there. And it runs up, it comes back, and we end up just kind of going sideways here. No short up here. There's no longs on my chart anyway down here. Notice that bar is too bearish. That bar is too bearish. This bar is too bearish. So there's just no good signal bar. Now, if you had a good signal bar that allowed you to get in near this low going long, this is a second entry long right here, but that's an inside bar, and this is your signal bar right here. So technically there's no entry right there. Now, if I was going to enter, you might enter long right there. And the only reason is because look how many times we tested that low, and that is a bullish bar, and it is bouncing off that low, and notice that one closed there. So you might go long right there, but if you do, this is your signal bar, so your safety stop has to go way down here, so you got to take that into account. So you got to be able to get in that, and you need enough room to scalp out what you do. So that's one that you might enter, but this is still your signal bar. So make sure you understand this. I'm going to say it one more time. Let me put this is your signal bar, the big bearish bar right above that green arrow. But your entry would be one tick above this bar. And normally I'd tell you, you don't use inside bars. And this doesn't have a matching low. But if you understand that support, look, we bounced once, twice, 3 times, 4 times, 5 times, 6 times. And this would be the 7th time. That's telling you that's strong support. And you can see the range here. So we're probably headed back to the high. So if you notice that and you saw it for that reason, plus notice there's a new high, first entry, and there's a second entry. And that looks like a big bearish move that probably traps some people all getting short in that bar right there, and then it reverses on them. So it doesn't look like it trapped a whole lot of people because it didn't rocket off real fast. It kind of did there. Then we're working lower, but notice you got this. You just came off the high, so you're expecting prices to go here, and you're working sideways, and you got proven resistance, and it fails. You don't want to take that first shot lower, even though it is a second entry. This is a double bottom, so first entry, second entry. That bar is not bearish enough. That's another one you could argue for it to be green because it is a second entry short. It's probably going to be a failed breakout, but the trend is up. And if you take these kind of trades, some of them are going to fail on you. Better off to wait on the lower high, which comes right here, and you get that big bearish bar. You might go short right there. And then you get a failed second entry long right there. I marked it green because notice what happens. It pushes through the EMA, the midline right there, and it comes back and tests it. Plus it comes back inside the range, and it tests the upper side again. It never holds from the upper side, just holds underneath, and that's a big bearish bar. The only reason I made this green is because notice you got 1, 2, 3 bars stacked up now, and 2 of them don't have any bodies or a real small body. And then you would have gotten out of this trade, but by paying attention to that congestion, you see what happens. It doesn't go very far, and then it's headed higher again. And so you could have got stuck in that trade. So that's why I marked it green. It's dangerous if you because of the lost my train of thought there. Where was it? Because of the congestion right there with the bars stacked up. And notice how most of them are closing above the EMA there until that one. And then even the ones that close below barely do until you get one, and then it reverses. So hopefully that makes sense. And then you come out and you draw that trend line right there. I got it off the highs and drug it down. And it bounces right there at the EMA. That's just the first entry. It is a fairly bullish bar. And if you count here, there's a first entry, there's a second entry, and then there's a third entry. But really what I was doing was counting. This is a double bottom. This one's pushing it a little bit. There's some matching lows and stuff in there. It's like a little failed break out of that congestion right there, which will often be a major low. So I just counted that as a new low. It's almost a double bottom too. So first it's like you can clearly see 2 legs up right there, and then this one fails, and it's the third touch of that trend line and confirms it with a bullish bar. It's not a perfect setup, but if you understand what's going on there, there's a good chance we're going higher. And you hadn't had a good trade here for a while either, so But that doesn't mean anything. You don't force trades. Off it goes. Same thing here. It comes back and it fails. And it's just an inside on a first entry, and you really can't take that one. It also breaks the trend line right there, moves to a new high, overshoots it, and it actually pushes one more time to a new high and then sells off. But you can't enter here, and there's really no entry way up here because now you're overshooting this channel. And you got to be careful when prices come back here. But notice you're coming down, first entry, and then there's a second entry long right there at the EMA. It's a double test. Notice you made that low. You test it once, you test it twice. It's a double test. It's not a perfect signal bar. I marked it green. It's second entry long. There's some reasons like that one, but we just came off the high, so there's a good chance we're at least coming back to the midline, and we may be coming all the way back to here. So, but when it tries to go lower again and fails, and so now look at that low, and you try to go lower once, twice, you get another double test, you get a failed second entry short. You probably got a bunch of shorts trying to go short right there on that, and you definitely can't go short right there on the second entry short, although it looks like it's going to be a trap to the upside. It just traps people to the short side and goes higher. That's a great example of why you don't counter trend trade, because that would have kept you out of that bad trade right there. And instead, when it breaks higher right there, go long with it, at least back to here, and it may even go all the way back up. But it just fails out the other side. And this is a little bit of a repeat pattern of this right here. You can see it, it's almost a perfect repeat pattern. And so if you notice that repeat pattern, you might consider that trade. The only problem with it is you see it didn't go back down here. It still worked out. And so that would be my only concern with it being a repeat pattern, is it may do just like this other one, but you may come up a tick or two short and it may go higher. The one difference here too is that we did just come off the high side, and we didn't do that down here. So that's a possibility. That's another one you could argue to be green. But, you know, like I said, anytime you are trying to counter trend trade a strong trend, which this has been, you're taking a chance. I'm going to go ahead and mark it green. But when it tries to come back again underneath, again, it's almost the same thing as right here. And it's not as good a signal bar, but it doesn't matter because it's probably going to be a long trap. And the fact that we touched it and didn't get there right here leads me to believe we're at least going to go that far on the other side of your midline and maybe back down to here. And that's what ended up happening. So, again, this one's close to being green, but I'm even willing to give that one a red one. The fact that we went all the way down here, it's pretty much just a repeat pattern. So, and of course we bounce. I don't get a good setup here. Notice all the bars stacked sideways. A couple of them no bodies. When you enter out it, of course the key is we are away from the EMA, so we're probably going to snap back. But you'd be surprised how many people will go short down here, and then it turns straight up, and they wonder, well, what happened? Well, you don't go short that far away from the EMA right into strong support. But it bounces. That's your first break. And if you'd had a good signal bar here, you might have taken a short. But at this point, the trend is still intact. So you're probably better off to wait and see if you don't get a good long entry. And it comes down here, and notice you find that support again right there. And notice the new high. Come back first entry, and you get a second entry long right here, and look at that big bearish bar, and it went below or one tick and turns up. But that's a second entry long. It's a nice bullish bar, and your short-term trend line's played out, and it's the first break of this trend line on a really strong day. I'd probably take that trade. It's real close to being green because it's close to the EMA, but I still like it. And we get a high or low here, but notice what happened. It turns down right off the EMA. And that's what you're concerned about. It turns down right off the EMA, but it does bounce again. But if you weren't already in here, I don't think I would risk it here because now you're just stacking up too much. It is a higher low. It is a fairly bullish bar. If that was a real strong bar and you could get in on the other side, I'd probably say take it, but I think it's a little risky there. And notice it doesn't come back. It doesn't go very far till it's coming back and testing it again before it finally goes higher. And that's because not enough people trusted that. Obviously, some people jumped in and drove it higher, but not enough traders trusted that, and it comes back and makes another test. Unfortunately, I don't get a very good signal bar. If you had a bullish bar here, go long, especially with that double top and a first entry, second entry, and that would be a double test of this level too. But I don't get a setup there. Runs up, and notice what happens. You can try to go short once, then you try to go short twice. If you draw that trend line up through there, it's right at that trend line. It's right off the EMA. And so a nice bullish bar. You got enough room to get out. I like that one. Runs up. Turns out that there's the brown two-tiered channel as well. But at that point, you just had this blue one. And it's got two tiers as well, as you can see there. Doesn't go very far. You can see it starting to lose momentum here, and then it breaks. And that takes you in the 2 o'clock hour. There's no longs or short up here. It's too dangerous. I mean, we do have the break and a couple of legs up to a new high. But really, I think what you're really looking at is you get your break here, and you got one leg up. And then you get your second leg, and you can see that's two measured legs up. This is a leg, correction, and then another leg. And then it sells off. Well, that's exactly what you're expecting to happen. The only thing is on this brown channel, you just kind of get a little overshoot and then work down. You don't really get a break and a new high before it starts correcting. So that's what I saw today. A lot to talk about there, but we still spent 30 minutes on a chart lesson, so it's hard to get all these trades in. And I've had a couple people ask me about how slow the market seems. This is still a really good market. It just seems slow after all the volatility. I mean, this is much more normal, but I've seen it even slower than this. So especially going into the summer a lot of times it gets super slow. So this is still a really good market, but compared to what we were seeing, this seems super slow. So, but trust me when I tell you this is not a slow market. This is closer to normal. We're still a little faster than normal here. So, all right, my phone won't quit ringing. I've turned the ringer off now, but we're almost done, so it doesn't matter. But anyway, big two-tiered channel working up. You got your break, couple of legs up to a new high, and then we sold off. The key, though, since we didn't come back to this key entry point, is finding these shorter term ones and finding the support. When we start to go sideways, finding the support and resistance. And really, whenever you start to see these sideways little congestion areas, you're usually going to be better off entering with the trend, especially the dominant trend. But you got to remember, though, as we're working from support to resistance, once you hit resistance, there's a good chance you're coming back to support. Doesn't always happen, just like right here, because the market got stronger, but that's the expectation. But before you go short, you better have a good entry. So anyway, I'm going to wrap it up and keep this under 30 minutes. I'm done for today. We'll be back tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.